Good morning, good afternoon, good evening, depending on the time you're watching this video. My name is Enwongo Henry. Have you been waiting for me? If yes, then let's go straight to what we have today. Today, I want to talk about price action strategy for trading boom and crash. Price action strategy for trading boom and crash. I have heard a whole lot of people talk to me telling me, how do I trade price action in boom and crash? Well, if you are one of such people who have been having challenges or who wants to learn about price action, then this video is for you. The first thing I want you to know is that boom and crash is like a unique market in the forex market. What makes it unique? It is unique because of the presence of spikes. This is what I mean. You can see these bullish spikes here in bull market, and in crash markets. Permit me to add my crash market, you have these bearish spikes. Let's check any of the crash markets and then you will see the bearish spikes. Alright, our network is quite slow, but it will definitely boot. Just a little bit of time. Alright, you can see it here. And these spikes are always very prominent in M1 and in M5. Now, many traders have had issues trading boom and crash because of the presence of this spike. Some people will ask me, sir, how do I trade boom and crash, knowing too well that if I try to scalp, let's say I want to buy crash, I realize that along the line in trying to get just one pip, that's one M1 candle, I end up losing sometimes 30, sometimes 20, sometimes $10, and the reverse goes for boom. And the simple answer that I often tell people is, if you are going to be a successful trader in boom and crash market, look away from the spikes. Try looking at the general trend of the market. That is because I see the spikes as distractions. Except you are a sniper scalper, that is when I can advise you, okay, trade the spikes. But if you're not, if you're a day trader or a swing trader like I am, I always advise people to trade the trend of the market. When we are looking at price action, we consider two basic things. Number one, a trending market, and number two, a ranging market. A trending market and a ranging market. A trending market is a type of market that has support and resistance as steps. What do I mean by that? A trending market has higher highs and higher lows, or lower highs and lower lows. What do I mean by higher highs and higher lows? You can look at this is crash 1000. You can see this movement here. So if you call this a high and then a low, a high and then a low, and then the market goes high, this point is what we call your higher low, and this point is what we call your higher high. Your higher low can act as your support, whereas your higher high can act as your resistance. The reverse is also seen in your boom market, where we can have situations like this, like you can see here, where we have your upward and downward movement, where this serves as your higher low because it is in an uptrend, and this serves as your what, your higher high, and your higher high can serve as your resistance and also as your support. Another peculiar situation is where we have a unique downtrend. Permit me to invert here, a unique downtrend like this, where you have your low, your high, your low, where you have here we have your lower high, we have here your lower low, and then we have your lower high, and it goes down. Now this is a trending market. Higher highs is for uptrend and higher lows is for uptrend, whereas if we have a downtrend, we have lower highs and lower lows. So in trending markets, we look at uptrend and in downtrend. In uptrend we consider higher highs and higher lows. In downtrend we consider lower highs and lower lows. Now the difference in trading these strategies is that if you are trading crash market, you realize that the drops are longer. Meanwhile, the bullish candles are a bit smaller. But if you are trading boom market, you realize that the bullish candles are longer, whereas the bearish candles are shorter. But what has this got to really make us understand? It means that in crash markets, the volatility is higher, whereas when you are selling, and in bull markets the volatility is higher when you are buying. But does that really mean that crash does not buy and boom does not sell? Of course, we can see that here is a bull market and we can see the massive downtrend. So in such a case, what do? It is not advisable for you to buy when boom is going bearish, and it is not also advisable for you to sell when boom is going bullish. The reason is because the general market structure will not permit you to make enough money. In fact, you are at risk. You are at risk if you try to buy when the market is selling, and you are at risk if you try to sell when the market is buying. So in this case, I remember on my first video I made a video on how to trade boom and crash markets using 0.02 lot size on any account that is less than 30 USD. And in that video, I remember placing this trade here, and the trade then was at I think 5 cents or 11 cents. And then I encourage traders that if you have any account that is less than 30 USD, trade 0.02. Now for people that didn't really believe so much, I want you to have a look at this. Can you imagine what 0.02 has done? He has given you $1 profit. Now, if you check the market again, the market has boomed. Yes, it has boomed, and has boomed for almost 30 pips. Almost 30 pips. And even with 30 pips, you still have $1.10. That means this market has been selling for over 55 pips. That is roughly 55 minutes of downtrend. And in such a case, what do? Do you buy? No, you sell. And remember, I told you I picked my trade at this support zone. The reason being that it is expected that at the support zone the market will buy. But then we had a little upward movement. It came down and then bought up. So I decided to pick my sell down. You can see from this point. Let me zoom it for you to see. I picked my sell down from this point, because I knew if this is a support and the market is on a trend like it was here, then definitely it is going to break this support zone. So what am I still expecting? I'm still expecting this market to get downwards. Downwards to what? To the next support zone, which is, you can already see that it is there already. So I should have exited this trade, because at this point I should expect a little corrective move upwards. So in trading price action, consider uptrend, downtrend, your highs and your lows. If the market is giving you a structure like it gave me here from my M5, you can see it's giving you your lower highs, lower low, lower highs, lower low. The next thing you should do is for you to look for a strategic entry and then enter for what? A downtrend. That way you are going to make massive profit. You can have a look at this trade here. You can see 0.02. In fact, there were even two trades. You can see two of them here, and then you have the result. The reverse is also the case. In trading price action, never forget the market structure, or what we call market movement. The first thing you should study is the market on an uptrend or on a downtrend? If the market is on an uptrend, is it on a higher high or at the higher low? At what stage of the uptrend is the market? If you know this thing, the next thing is for you to look for a strategic entry. Enter the market with a minimum lot size and then allow the trade to run. As you practice this strategy, I see you succeeding. Have a good time.